Hey, welcome back to Inventory Watch for January 28th, 2024. This is inventory for the Phoenix Metro. Lots of things happening in the housing market this week. A couple of things I want to chat about are going to be big news headlines. Actually, I never talk about news and how it affects our market, but something happened in the past week that I want to chat about. So let's just get right into it. I'm going to get into presentation mode here and let's talk about the news that I found. So one of the things I thought was really important to talk about was this acquisition from Blackstone acquiring Tricon Residential. And if you watch, I'll post a video somewhere up here that I had done talking about how leveraged I thought Tricon was, that they had a lot of debt compared to the other investment companies that were buying single family residential homes for their rental portfolio, and how I thought that they were going to possibly start selling off some of their assets in the market that could cause our inventory to rise here in Phoenix. Well, they did decide to sell some of their assets, except they did it a different way. And instead of putting them on the MLS and deloading some of their assets, they sold their whole package to Blackstone. So let's get into that. This is straight from Blackstone's website about their acquisition in Tricon, and they are planning on taking Tricon Residential private. Now, it's important to say that Tricon Residential is a publicly run company. They do have stock that you can purchase on the stock market. Blackstone is planning on taking them private, which means they will be delisting. And companies usually do that when they signifying that short-term growth is probably not in the best interest of the company, that growth is probably not going to happen, causing the stock to go up. So they plan on purchasing the company, delisting it from the market so that they can streamline operations and do some cuts and do some things that will probably have a negative impact on the stock. So they are planning out buying the investors and things like that. Now, Blackstone is obviously smart enough to understand what they purchased with the leverage, how much leverage Tricon had. And they did negotiate, I think, a discount on the assets that Tricon had. So I believe that somewhere I read that Tricon was worth about $3.9 billion. They got it for $3.5 billion, as well as they're probably looking over the portfolio. Now, Blackstone could be the ones that are going to sell off some of those properties, or they could figure out how it balances out in the portfolio as a whole. So, because you got to remember, Blackstone did purchase a bunch of homes back in 2000, 2008, 2009, getting a lot of homes for really amazing deals. And so it could just balance out the portfolio. They might not have to sell them at all. So it just depends. So just something to keep an eye on, moving in, because Blackstone does, Tricon own a lot of single family residential properties here in the Phoenix Metro. So it's just something to watch and something to keep our eyes on. So let's get into the Phoenix housing numbers. The market is still booming here for starting off 2024. So let's go straight into talking about new listings. And let me shrink my head here a little bit so that we can see the charts. So we can see that we had another week of higher listings coming onto the market. We can see that we peaked the week of January 13th with the highest listing count being 2135, but we're still about 1,900 listings this past week coming onto the market. So you can see here year over year, if we compare how many listings we have this time of year to last time of year, January 1 through 27, we are up 11% year over year with brand new listings coming to the market, which is great because we need them. So if you're thinking about selling, this is a great time to put your home on the market. There are buyers in the market, and we will talk about that on another slide. The January inventory target to beat is 7932. As of yesterday, we were at 7912. So we're definitely going to beat the January inventory target, and we are now on pace, since things kind of slowed down, I had projected us to be about 8.5 to 9K. I've lowered my projections a bit to 8.3 to 8.6K. So we'll kind of see where we end up in the next 4 days of what that inventory looks like. So we're definitely going to beat last year's inventory, which is great because we do need it. Let's talk about total listings for a bit. So this is brand new inventory. So now let's look at our inventory as a whole and see how that's trending. So total inventory, even though we got 2,000 homes to the market last week, we are not seeing that in our total active numbers. We're actually only seeing about 100 new homes. And that's because buyer demand has increased now that interest rates are in the sixes. And we're going to talk about that. So there are buyers on the market. We still have a low inventory situation that's happening here. And if new listing inventory doesn't keep up with buyer demand, we're actually going to see our total active inventory in the next couple of weeks actually start to go in the negative direction. And instead of increasing by 100 or 200, it's going to start decreasing. So something to look at. Now, if we're comparing January's inventory to last month, we're up 7.2%, but the buyers are back and they're back with a vengeance. So we're going to keep an eye on that. Average list price is also up. 849,000 is the average list price right now. And sellers have this confidence of, yes, I'm going to list my house and see what I can get for it, because they know the buyers are back. So let's take a look at pendings and see what that looks like. So as you can see here, this is a weekly look at pendings, and basically all through November and December, it was really low. The buyers just were not interested in looking at homes. Like, we had very small amount, and then we just saw it ramp up over the past few weeks going into the new year. So home buyers are up 5.6% week over week. And I believe year over year, we're up a ridiculous amount as well. But I would say for the month of January, we're up 20% more buyers than we did last month. So lots of buyers running around right now. And we are looking at the 30-day average under contract price of about $620,000 is down from last week. So it looks like we may have hit the threshold and people got real excited. So we may have kind of hit the average price of where we're at right now. So that's where we are with buyers. Buyers have remained steady and increasing. And again, if the buyers continue at this pace going into Q1, our total active inventory will actually start to shrink, because now we have more buyers than we do people listing their homes. So if you're thinking about selling, again, great time to list your home. The buyers are here right now, and it's all going to be dependent on interest rates. I think this boom is because interest rates did fall and people are there. I wanted to talk about interest rates. Let me find that. We'll go back to the pending ratio, but let's talk about interest rates first. So this was a snapshot of interest rates on January 13th. We were at about 6.7% for a conventional 30-year and a 6% on a 30-year FHA. And that was just a couple weeks ago. We did see interest rates go up 0.2%. So we're now at a 6.9 versus a 6.7 for a year conventional. And we're at a 6.2 versus a 6% for a 30-year FHA. So as long as, they increase and decrease in these really small increments, buyer demand will probably continue. If we see interest rates go up over 7, I think that'll start to slow things down a little bit. So interest rates are going to be what you need to keep an eye on if you're thinking about selling your home and what kind of buyer demand we're having. Let's go back and look at the pending ratio, because there's big changes in the pending ratio. And of course there is, because we saw that buyers came back to the market again. We had another 5% increase week over week, which increased our pending ratio from 42.8 to 46%. Huge demand, almost 4 points. We did get almost 4 full points coming into the pending ratio. So the more that we're over 40%, the more we are in a seller's advantage. When we go under 40, closer to 30 and below, that's going to be in a buyer's advantage. So I would say right now, sellers are in control and buyers are losing control of the little bit of advantage that they had in Q4 of 2023. Like things had slowed down enough, but buyers just weren't interested, and they are now because rates are down. It's spring, and this is a time where people like to move. It's not spring, but it's spring weather here in Phoenix. And so people like to go out now and start looking, getting homes under contract before it gets too hot and before the kids get out of school. Our kids get out of school here in May. It's a little bit earlier than some of the other locales. And so that's kind of what we see in our trending. But so this is the total under contracts, increased to 7,371, which did push this ratio in the seller's favor. So that's where we are in the market. Let's take a look at, we talked about interest rates. Let's look at sold homes. So sold homes are a lagging indicator. So we are seeing sold homes still being reflective of the December drop in demand, right? So sold homes right now are a little slow, but they will increase for February and March because all of the buyers right now that just put homes under contract in January are going to start closing in February and March. And we're going to see that uptake from all of those pendings start to show next month and the month after. So we're going to see, and that's where we're going to see that average pending price of 620 increase our sales. Our month to date average closing is 566. I expect that to go up in the next couple of weeks here to start showing 580 and whatnot into the 600s once the January's pending start closing. So I would keep an eye out for that. Let's talk about the rental market. The rental market is very interesting because we just talked about how Blackstone is planning on acquiring Tricon Residential, and they are one of the biggest owners here in the Phoenix Metro of single family residential. So we did see that we have a year-over-year increase in rental listings of 3.7%. Not a huge number. I mean, it's basically 100 homes. So it's really not that big of an increase in new listings. We did see renters kind of come back and hit the market in December of last month. In November and December, at the end of the year last year, we did see landlords start cutting the prices because there were no renters. And so I believe that they cut the prices enough to where it became interesting and affordable for some people. So we are seeing, and it's that time of year where it's like we have spring. And so we are seeing renters kind of come back to the market, this month, and it's outpacing the inventory that we have. So here's what I'm going to say. If you own an Airbnb and you're not having any luck in the Phoenix market, but there could be some listings out there that are starting to slow down. I see them starting to slow down across, different markets across the country. So if that's you, if you're not having great luck with your Airbnb, I would take my chances on the rental market as rentals are starting to pick up. So that's my thought there. Pending and contingents, you can see on the weekly, like we do have more renters in the market this week than we did last week. We're up about 115 new renters coming into the market this week. So active renters this week, 736. Last week, we were at 615. So that gives us our pending ratio for the renters is also up significantly. We were at 8.7 last week with the pending ratio. So just in 1 week, we're up 2 whole points on the pending ratio. And that is giving the power to the landlords to increase rental prices if this continues. So this is the first week of the year where the pending ratio is over 10%. So we're at almost 11% here. So again, like I said, if you are planning on renting your house or you have an Airbnb that isn't bringing in the revenue, this single family long-term rental may be an option for you. So I believe that's all I got. We can talk about the closed rental prices. This month to date, whoops, I didn't update that. Still says January 20th. Month to date, I did update the numbers. We are at $22.71 for the average rental home price here in the Phoenix Metro. Last year, we were at $23.17. Again, at the end of last year, we did see rents starting to come down, and now they are starting to trend up a little bit. And I think they'll start trending up and hit they'll hit maximum capacity where people are going to tap out and say that's too rich for me. But I still think we have, $50, $100 more in pricing increases that our community can handle, which kind of sucks. So if you're thinking about renting a house, end of Q4 was it for you. But there's still some great deals out there. I am still seeing apartment complexes offer 6 to 8 weeks of free rent. So things like that are still happening. But if this demand continues to go at the pace that it is, the buyers will continue to lose out on those options and those incentives. So just keep an eye out there. That's all I got for you guys for this week. So hope to see you next week, and we'll continue to talk about housing news and the latest stats here in the Phoenix Metro. Have a great day.